Hey guys, welcome back to my channel. This is another week of fundamental analysis, and today I will be also going through my July trading results. July has been a net loss. We'll go through the numbers itself, but let's just dive right into the fundamental analysis. So this is from the 27th of July to the 2nd of August. Just keeping in mind, as per usual, this is not financial advice and this is purely my take on the markets. Please do as you wish. COT reporting data came in this week with a bit of a mixed bag on what's going on right now. It doesn't really reflect in the charts for the previous week, but we will go through it and see what sort of biases we get. So you guys can see we've obviously lost a little bit of that steam for both USD and Aussie. Aussie remaining sort of neutral, but actually no, US dollar actually ticking slightly more bullish, dollar slightly more neutral, and then yen, you can see we've got a bit of a drop in the open interest long positions. When we jump on the charts, it's apparent that this sentiment doesn't really suggest and reflect based off the charts, but this is just one aspect of the analysis. This is not the full picture, so I'm using this as just another indicator, I guess you could say. But something to note, we've got slight bullishness in the dollar, neutral for the Aussie, and then bearishness for the yen. In terms of Dow Jones, US 30, big uptick in long open interest. You can see we're up to 80.3% now, which is huge. I'm still not confident in trading that, and you'll see based off the economic data that that's my stance on it, but something just to note from a sentiment point of view. Gold, we have also ticked slightly higher on the open interest long in gold as well. So yeah, very interesting to see COT reporting. We'll go through the charts later just to sort of confirm that. From an economic reading point of view, you guys can see that obviously with the dollar, it has ticked even more bearish than before. We had advanced GDP being cooler than expected, consumer confidence for another month being cooler than expected, and then core PCE also being cooler than expected. So there's a lot of red right now. I'm definitely on a short bias for the dollar. We do have a little bit of bullishness in the labor market readings, but from a net position, inflation coming down, economic data coming down as well, I'd rather be on the short side for the dollar. For the Aussie, pretty much very similar stance. Inflation coming down, economic reading being cooler than expected, labor market being bullish. So net bearish on the Aussie. And then with yen, I'm net bullish on yen. We've got Tokyo CPI being hotter than expected, services PMI being cooler than expected, but sort of net bullish on the overall readings. We've got economic data for consumer confidence being hotter than expected, retail sales being cooler than expected, and then neutral labor market readings. So still net green for the yen. Happy to long based off these other pairs that we're tracking, the dollar and the Aussie. Going to the charts, you guys can see interest rates going down for the dollar, or staying steady at least. Aussie going up, probably going to need to calm down based off the reading so far, and yen interest rates going up. If we look and compare it to the CPI data, we have inflation coming down for the dollar, which is good. Means we can hold those rates at that 3.75. Also have Aussie coming down as well, which with the interest rates going up, it's suggesting that we can actually calm down, have a bit of wiggle room in terms of having this calm down to stimulate the economy, for the Aussie economy. Yen, we've got CPI actually sort of climbing back up. Really, with these two readings here, most probable suggestion would be just to keep the interest rate the same at 1, still lower than the other countries that I'm trading. So again, if we're keeping interest rates the same here, we're lowering Aussie, lowering the dollar, I'd want to be on the long side for the yen if I traded against these two. Economic reading, we can see advanced GDP being cooler than expected here and coming down. So again, wanting to suggest a drop in the interest rates to stimulate this component. And then unemployment rate remained the same for the yen. So in terms of my overall bias for this week, we've got gold, slight bullishness in terms of sentiment. We have a neutral gold reading, and the reason for it is we've got a bearish US inflation, which is good for gold, bearish US economic data, which is good for gold, but bullish labor market being not so good for gold. I think overall though, I would start to lean slightly in favor of longing the gold. We're still net bearish. I think I might actually change this because I think I do want to start to catch gold on the long side. We'll go through the charts just to reconfirm that, but let's put that in for now. We've got a long bias for gold despite a bearish technical trend. We'll take a smaller position size just to get in a bit early if we do start to see this gold chart suggesting, a reversal. For US 30, we've got bullishness in the COT reporting, but really the economic news I'm not happy about, especially because the US economic data was cooler than expected overall. Despite these two indicators being good for US 30, because of the weakness in the economic readings, there's no real push for me to trade this. I'll stay on the sidelines for US 30. AU, both Aussie and USD is kind of cancelling each other out. They're both bearish, so I would be on the sidelines for that, no trades. And then, like I said, UJ and AJ, bearishness in Aussie and dollar, bullishness in yen. I'm happy to actually long the yen, short the other currencies. So if we jump on the charts here, we'll start with AJ. AJ, I'm sure you guys would know from that previous week, was a crazy swing to the downside. We didn't catch it. We took a short position here, obviously got stopped out, and price came coming down from all-time highs. So yeah, it was something. Look, there was intermediate sort of push up, reached this zone here and came flooding down. We were still early about it. It is what it is. Could have been a nice trade, to be honest, around this point here or this point here, but right now what I'm looking at is to get a retest in the H4. H4, we're probably going to look at this previous lower high as a means to get through, and even this one here with a nice rejection wick. So two potential trade ideas there. AU, like I said, we're both sort of neutral right now. It's hit the moving average. Looks to be more bullish overall, but I'd rather just not trade this. We've got other stronger currencies to trade. UJ was, no, we didn't try to get a position in here, but you guys can see we've got a big bearish candle coming down under the MA now. Go to the H4, we've got a nice resistance zone here, so if price does move up to here, I'll be happy to trade that through. US 30 above the MA, solid support around here. Like I said, we don't have great economic news in terms of US 30, so right now we are on the sidelines. I'll actually pop in a zone here as well, just to highlight that consolidation that's sort of forming right now. So be on the sidelines until we get better economic news. If price does touch here and we start ticking up in terms of bullishness for the economic readings, then I could potentially get a trade here and look to scalp a little position, probably up to here for a nice 4.6R. But at least in this meantime, we'll leave that alone. Last one is gold. Gold, you guys can see we are below the MA. We start to get a little bit of accumulation here, bit of consolidation, price bouncing out here and there. So I'm actually, would be good to see price come through here. We could get a potential H4 there, or even a H4 here, which is the daily support zone. And obviously, because we are trying to catch this below the MA, will be a lot of upside if it does push up. So those are the potential trades for this coming week in August. Something to note down. Markets are starting to actually move quite nice again compared to July. So